Hey traders, Akil Stokes here, head currency trader with TradeEmpower.com, and welcome back to another weekend review video. My apologies for missing you guys last week, but I was preoccupied growing this awesome beard. Pretty awesome, right? With all seriousness, it's just been pretty busy lately. I've got the trading business. Obviously, I have a real estate business as well that I'm a partner in, and we've been working on a few deals, so it's just haven't had the energy to do all the extra stuff like these YouTube videos that I always do. But didn't want to leave you guys hanging too long, so I'm back this week, and I kind of want to follow up on the last video I did. Now, if I remember correctly, the last video I did was talking about the month of September and how it's usually a difficult month for traders and a difficult month for myself as well, just historically. And I'm at the point right now where I'm finally starting to dig myself out of the drawdown. I've been in a slow drawdown all month, nothing too big, but a slow, more equity lows than equity highs, and I'm finally starting to bottom off. And today was a great day. At one point, I was up 100 pips today in the live room, gave some of it back, but we're starting to see things head in the right direction, which is a positive side. And for you guys that have never dealt with a drawdown before, don't freak out. It's natural. It happens to every trader in every system. And all you got to do is trade yourself out of it. We never know how long they're going to last, but they don't last forever. Just stick to your plan. You should have a proven system with a positive expectancy. And as long as you're disciplined in following that, you'll trade yourself out of that drawdown and go on to new equity highs. But it takes discipline. It takes a lot of, it takes a strong mental capacity to do that. You got to have mental discipline to get through that. One of the things that I've been doing sort of to hedge myself in this drawdown, because patterns have just been horrible. I shouldn't say horrible. Patterns haven't been good, is hedging my positions with my structure-based trading techniques. And that's what I that's what I want to walk you through today. It's actually a structure-based trade I took on the euro dollar. And what is interesting about it is that it was a trade I had on my radar. Well, I had the pair on my radar since Wednesday, but the trade that I actually took had nothing to do with my original idea. I started with an initial idea, initial thought process. That got blown out the water, and then had idea number 2. That got blown out the water, and had idea number 3, which finally took place and was able to make a little money off of. But I want to show it because it's a good example of the difference between structured trading and pattern trading. Pattern trading, and this is why a lot of the intro stuff we do, a lot of you guys that have just signed up for the syndicate or that have been in the syndicate for a while, a lot of the stuff we do in there, especially what I shoot through on the trade floor, are pattern trades because it's very easy to pick up. It's black and white. A has to be this, B has to be that, C has to be this, D has to complete there. Every time entries go here, stops go here, targets go there. You can literally, and I tell this to the traders I work with that work full-time jobs, you can literally do all of your analysis in the morning, set up your trades for the entire day, and then just check your chart maybe once or twice throughout the day, to see if you got filled, if you need to put targets down, something like that. But very minimal management when dealing with patterns. Structured trading, however, is the exact opposite. For most of these trades, we have to watch price action, watch candlestick formations to make sure we're entering at the right point. And then once we're entered, we have to actively manage that trade, whether it be rolling stops with structure, whether it be, exiting the trade because of a reversal signal. It's a lot more active, and it takes a lot more dedication and a lot more. It takes a bigger knowledge base to be able to successfully do that. But again, today's example of the euro dollar trade is a great example of that, of how just the active management of a trade, but continuing to go through the IPDE process, identify, predict, decide, execute, even when the initial trade doesn't go your way. And again, if you stick to it, I stuck to this one and was rewarded with some pips. Not a big trade, but hey, any pips in my profit is better than giving pips out of my profit. So sit back and enjoy the video. It's going to be a flashback video from one of our live room sessions, and then I'll join you again after that video to give you an update on the trade that I actually took. right, so we have an ABCD pattern right there. I've been looking at that 28 even handle as the next spot of support. So we may be able to get a counter trend opportunity down there. ABCD pattern completion. We're going to have a 1618 Fibonacci retracement there. So we can build a case for entry here. But I would certainly take a very, very conservative approach. Again, similar to the Aussie CAD we had, ABCD pattern completion, Fibonacci confluence. However, this one's not with the direction of the overall trend. So if price action comes down here, we're already oversold, it looks like. Already oversold. I would look for a double bottom, or and depends on how aggressive you are. I would be conservative with this. So I would look for a double bottom at this area before looking for a chance to get long. But you can also look for stuff like a higher high, higher close entry technique. Now, the key is going to be with where to take targets at. Traditionally, with the ABCD pattern, we're looking at a Fibonacci retracement from our A leg all the way to our D leg down here. And we're looking at a 3D2 being target 1, which comes in at a nice structure level right here. A 618 being target 2. Let me just see what happens if we take a 3D2 from our most recent move. This is more of a conservative way to take targets. I would actually think that I would say that this is your better bet to take a smaller target 1, or at least move stops when we get to this level. Mainly because here's our most recent structure levels are where? This one's a little bit higher near our bigger 3D2, but we have these two levels right here that we should be aware of. I wouldn't be too convinced that price action is going to break past this level. And we may not even get this. We're rolling down. We may not even get this at all. But in this scenario, I would certainly look for. I would have looked for a more conservative entry approach. Looks like we're not going to get that though, as we broke through. So we're going to need to wait for a pullback before any type of move on euro. Counter trend traders, this is your next kill zone. This is your next level of support right inside this area right here. Let's make this green. So I would certainly be in wait and see mode until the market hits this level. Let's just see what we have here. We may have another ABCD pattern here. This is the fun of trading, guys. Day trading. It happens pretty quickly. All right. See that? Second ABCD pattern down there. Let's see if we can build a case down there. Let's take a few fibs. Let's take a Fibonacci extension from, I'm going to move this to the side so I can see it. Swing high to swing low. And back up. We're going to have a 127 right above that. We may have a 1414 right in the middle of that. 1414 right in the middle of that. If we take a Fibonacci extension and invert it from our inside leg here, our C leg, back to our B leg, back up. Yep, I'm measuring. I got the question. Are we measuring every impulse leg? Yep, I'm measuring every impulse leg with Fibonacci extensions and inversion. So I'm looking at swing high here to swing low. I'm looking at this being an impulse leg right here, and I'm also measuring this leg right here. Swing high to swing low. Actually, the swing low is right here. And what I'm doing is just getting a cluster of fibs. I'm doing inversions too. The inversions are going to come from the inside legs. So right here is going to be an inversion leg. And then right here is going to be an inversion leg as well. Crimson. So using the same tool, just doing it in different ways. And again, what do I have here? Well, I have a Fibonacci cluster of 1618 inversions and 1414 extensions and XYZ, all in the same area. So it doesn't really tell me anything different, but what does it do? Does this build confidence, guys? Does seeing all these Fibonacci's down here build confidence? It's not a different zone, right? We already identified the zone on the daily chart. Now we're building confidence. We're building a case for entry, because the more we have, right? The more we have, the more confidence we can have in the trade. So right now we've got an ABCD pattern. We've got a zone of structure. Look at that. Our ABCD comes right in at this smaller zone. This, you can barely see it. It looks like 2771, 2764. But we have a zone right here of where we can look for entry at. So if I'm looking for a bullish trade, then I'm eyeballing this zone of right here, 2777 to 2737. 40 pip zone, I know, but it's a daily zone, so it's actually pretty small for daily support. For Dale support. Now we just wait. Now we just wait, right? IPDE, identify. We identify what the market's doing. We're going lower, right? The market is going lower. Pretty simple. We predict it. Where's the market going to go to? We found daily support. We found Fibonacci clusters. We predicted that the market should go somewhere in this area. Now, you have a heck of a lot of time to decide how you're going to attack this trade. What do you need to enter? And that should be in your trading plan. People make a big deal out of the decision part. Oh, it's so hard to, how do I enter? What do I do? That should be the easy part. You should have, if you have a trading plan. If you don't, you should stop trading right away. If you have a trading plan, it should be in your trading plan what you need to enter. For newer traders, it should be very simple. It should be one thing. If you're just starting out, it should be, I need a double bottom every time to enter a trade. What do I need on my double bottom? I need the RSI to be overbought. I need divergence on the retest. If and only then can I take a trade. It should be simple. It shouldn't be a question. If you're a more experienced trader, you may have different rules depending on the technique. You may be, hey, because this is counter trend, I need a double bottom. Or, maybe you have, because it comes right in the middle of a kill zone, I can enter on a pin bar or a higher high, higher close. But when you have more experience, you can handle more techniques because you know exactly what you're looking for. So this is something you note on your chart. You don't do anything silly. You don't say, well, let's get short right now because you said it's going to come down to the zone. We don't know that. You just wait and be patient. Wait for that right opportunity. Wait for that right opportunity and then go over the plan over and over in your head. How am I taking stops? How am I taking targets? I forgot about this leg. I went through this leg. 127 extension from this leg. Another impulse leg. Swing high, swing low. I'm calling 127. Booyah. Akil, you so good. I know. Tell you use these Fibonacci's enough, man. You just start seeing them in your sleep. 1618 inversion. Watch. Bang. Akil, you so good. You start seeing these things in your sleep. I'm telling you, I'm getting better at it though. My lifelong goal was to predict every fib without drawing it on. So we just built more case for entry. Look at that. So that's euro dollar. With all that being said, now we just wait. We just wait. We put this chart somewhere on the side, and we say, you know what? We'll wait to see if the market does it or not. Then we move on to the next pair. So let's go to pound dollar next. Any questions about euro dollar first, I guess, before we move on? So as you can see, we looked at a few trading opportunities on the euro dollar on Wednesday, and none of them really came true. However, when we went to look at it on Thursdays, here's what I saw. Let me get a fresh chart up here. By the way, beautiful trade on dollar yen. You can see this nice rollover. We had a bat pattern and a cipher here, which tremendous looking trade here. I need a chart without constellation on it so we don't get all these patterns and whatnot. Let's go this one. All right, I'll look at that. Actually, I have a circle on there looking at it. Let's erase all this now on euro dollar. And here's what I saw going into the day. The market had came down to this level, and we had a nice candle down here with a big long wick. And again, I'm looking at the wicks of these candles just to get an idea of where the buying pressure and where the selling pressure is at. And for you guys that have been with me for a while, or that just know the simple basics of technical analysis, well, you're able to tell that this is what? Yeah, this is a double bottom down here. Price action comes down from up here. We bottom out. We get a retest. We get a retest. Boom, giving us a double bottom right in this area. And a double bottom, this is a tradable opportunity, especially when we add something like this. When we take a look at our RSI, our relative strength index, and we add that the RSI is oversold, massively oversold, down at under 10, it looks like, on the first test right here. Then on the second test, we've got a higher high, and that's called RSI divergence. That's a reversal sign. So this is a good opportunity to take a trade normally. However, when we broke it down in the live room today, I said, guys, this is I actually did a poll. I said, what do you guys think about this? Is this a good trade? Would you wait? If so, why? And we had a pretty good discussion on it. And we ended up saying that personally, I would wait on this trade for two reasons, with the main reason being that there's just no structure at this level. If we take a look at the daily chart, it's going to be a little different now because this was at the start of the New York session, so 8 o'clock this morning. It's about, what is it now? It's about 6 o'clock at night now, New York time. But when we originally looked at our daily candle, we were looking at this structure level right here, the same as in that first video. We were actually below it at the time. Now, we ended up getting a very good close here, and that's going to work well for the trade I'm currently in, which I'll tell you guys in a little bit. But we were below this structure level, below this level of previous support. And because of that, I don't want to trade in the middle of nowhere. I only want to put my hard-earned money at risk in areas where I think I have the best probability of winning. So for this particular case, I said, guys, I like the double bottom. I like the RSI diversions. I like the RSI being oversold. I just don't see structure. So I don't feel comfortable taking this trade. And that's why we have backup methods. And it was a great trade that Jason actually did a free video on YouTube. Check under his YouTube site called the 2618 trade, where it's a way to get involved either if you're waiting for more confirmation on a double bottom, or if maybe you're asleep when it forms and you just missed it. And that's exactly what we're waiting on here. And I'll show you guys as we go down to a lower time frame what exactly that is. So again, we got our double bottom right here. We're looking at bottom number one. We've got our retracement. We've got bottom number two. What we're waiting for in this 2618 trade is we're waiting for the market to breach this level right here, breach our previous structure level, bang, higher high, higher close, give us a bullish rotation because we've broken previous structure to the high side, break above, close above, new structure high, all of the basic stuff, right? The basic stuff. And then we're looking for a retest of our structure level or our 618 retracement, what comes right here. And what we're doing is we're looking to buy the market up at our 618 retracement, sort of in trend continuation fashion. So we got a 2618 trade right here. The market rallied up. I did cover half my position up here, and I'll show you why in a little bit. But you can see we spent days looking at this pair. One idea turned to another. That idea turned to something else. But we stuck with it. We stuck to our technical analysis. We stuck to our IPDE: identify, predict, decide, execute. And eventually we were rewarded. Now, here's what I mentioned earlier, that these structure-based trades take a lot of management. And because I do think we're going to see some relief in the dollar. I'm very bullish the dollar, but we've been very bullish for a long time. And relief it's got to come at some point. I don't know when, I don't know for how long, but it's got to come. So I'm not too with that being said, I'm still not too excited to take a longer term counter trend move, going bearish on the dollar and saying this is going to be an area of complete reversal, because I don't think that. I think we'll see some type of respite, some type of relief. I don't think we're going to reverse all the way back up. So I want to actively manage this position. And this is when I went down to my range bar chart. And for you guys who are not familiar with range bar charts, range bars, unlike minute charts, they don't measure a candle close at the end of a minute. Say like a 5-minute chart, you would get a close every 5 minutes, or an hourly chart at the top of every hour would print a new bar. Range bars move in ranges. Can you imagine? Range bars move in ranges. Range bars move in ranges. So this is a 5 range bar chart. So every time price action moves in a range of 5, it will print a new candle. And essentially what it does is it just gives you a much clearer view of price action. You can see you don't get a lot of these small little weird looking candles. You don't get a lot of big wicks and stuff that can really mess up your view of price. It's nice and smooth, and you can see it's very easy to manage the ebbs and flows of the market. Boom, swing high to swing low. Outside return, swing high to swing low, outside return. We actually tried to catch a pattern here in the live room and failed. But here's what I noticed during the 2618 trade. I originally entered right here. This was our 618 retracement right in this area. And what we did was I watched the market. I watched the market move up. I watched the market give us an outside return. I watched the market create a higher high, higher close, new structure high. What did that do? That allowed me to roll my stops from underneath our original double bottom, up underneath previous structure here, up underneath previous structure here, to the point where at worst case scenario, I was breaking even or still making about 5 pips on this trade. Now, typically with the 2618 trade, I want to take my targets off at the top of structure here. Our structure highs up here at 2764, but here is why I didn't. And this is where knowing, being knowledgeable about different ways to trade the market, being knowledgeable about advanced patterns comes in handy. What do we have right here? I kind of drew it out for you already, but we have a Gartley pattern completion here. We've got an advanced pattern. We've got an X to A to B, B to C, CD completion up here. So instead of being selfish and trying to sneak out an extra, 6 pips of the market, I covered half my position, made about, I think it was about 15 pips, no, more than 15 pips, maybe about 25 pips. I got to check. About 25 pips on here on first position, rolled my stops to break even. And now I'm shooting for extended targets, but there's no worry of me losing money. I've put 25 in my pocket already. I can count that as profit. The worst case scenario is that I get stopped out for break even on the second half of my position. Whoop-de-doo. That means nothing when you're playing with house money. Now, if it's happening all the time, it means something, but in this scenario, it means nothing. So a little bit of trade management for you guys. So that's what's been going on with me. That's what's been going on with euro dollar. We've got a similar situation on euro yen. For you guys that follow me on TradingView, I posted this nice little chart earlier today. I don't know why that green thing is in there. I don't know, but same thing as the euro trade, a bunch of Fibonacci confluence, harmonic moves, all at this level. We bottom off here. I actually got long right after the live room closed. So I'm up about probably close to about 20 pips right now, but we haven't moved nearly enough to, for me to get excited about this and say, oh yeah, it's gonna be a winner, especially entering the Asian session where I expect the market to stall. But hopefully we'll see a nice overall move overnight during the London session, and we'll see. So that's it for today, guys. Hope you enjoyed this video. Really quick, if you are a subscriber to the Forex market preview, you heard about Jason offering the $1 monthly trial in the syndicate. I think it is. I think it's $1 for a month. I'll give you the link so you can check it out. But you're gonna wanna you're gonna want to get on that, because I think Jason said he's only gonna have it open for maybe a week. I think at the end of this week. And just me knowing Jason, he's pretty serious about his deadline. So if you don't sign up by the end of the week, the offer will be going away, and you won't have the chance to view all this delightness. Again, this is the morning war room meeting that Jason does every day. It's about a 20-minute video of him sometimes ranting, talking about a few trades on his radar, and then the news. We've got a section for news, charts. We got video uploads right over here. This is where I post the different syndicate videos that I do throughout the week. Again, I usually post about 2 a week. Yesterday I did 2 just because it was a busy day. A lot out there this evening, hence the name. And then there's other stuff like the trade floor software, of course, where you get our intraday stuff right here. our updates on what trades Jason is taking, what trades we're taking here in the live room. Are we in? Are we out? Kind of if I'm rolling targets, stuff like that. And then, of course, there's the training course, which is definitely, if you're new to trading, this is something you want to see. You want to check out the training course. It's an introduction course, but it's great. It covers topics like getting started. You know, how do I decide on what type of broker I want? How do I decide on what charting platform I want to use? How do I decide on I don't know. I haven't watched the entire thing yet, but I know it covers a lot of the basics, which are still exciting to myself. For some reason, it won't load, probably because I've got 1,000,001 things running on my computer at the same time. But let's see if I can click this one more time and get it up for you. All right, there you go. As you can see, the training course has 4 sections. Only section 1 is up right now, getting set up. And again, that's just a basic intro. Boom, the gear, brokers charting, basic intro, but it's fun stuff to watch and a good review for anyone. So again, that's it for this week, guys. I'm off to eat some nice, delicious salmon and veggies, trying to cut as much carbs out of the diet as possible. So I'm going to get to producing this video. I'm going to cook me some dinner and enjoy tonight's Thursday night football game between the Redskins and the Giants. It should be a good one. Yeah. Anyway, thank you once again for joining me. And as always, traders, plan your trade your plan. Good luck in the markets, and I will see you next time I see you.